Ladies and gentlemen, welcome to the Fintech Friday show with, and I mean this, the greatest co-hosts you could ever have on a podcast. With me here today is Roy Crossroads, or as the Robinhood IR team says, Roy from Crossroads, Stephen Fiorillo, the great and powerful, and Tevis, who loves to make fun of investing. How are you guys
better
doing?
at these openings?
Sorry?
You're getting better at these openings.
I mean, he's had enough practice. He should be good by now.
Yeah, like 3 years.
Build it.
Yeah, I mean, it's easy to tell the truth. You guys are the goats of the industry, of the YouTube, talking about one stock usually, SoFi, week after week after week. It's fun. Okay, I killed it. So appreciate the compliment. I ruined it. Let's restart. Okay, ladies and gentlemen, welcome, Four Guys.
Now you're making it sound like a burger chain.
It's a discount Four Guys burgers and fries.
What's going on here?
Did you save for November?
I reset it.
Reset it.
I reset it and then the market crashed. So I'm never going to do that again.
You look like 10 years younger.
Thank you. If I cut it all off, it would be bad.
So do we think this reversal is legit, or is this just hope to see if the government is no longer shut down, or at least some of the essential services come back on?
I think that it'll stay rocky until we see a resolution, but it's going to be a lot of this. But I'm curious, Steve's thoughts.
I think that they're going to get a deal done. Maybe I'm being too optimistic. I am thoroughly annoyed that the government is still shut down. I think it's ridiculous that we have Americans working and not getting paid. I think this is very bad for a lot of people and a lot of families. And it just goes to show you how I'm at a loss for words for what I actually want to say about both political parties, but it's disgusting that they can't actually work together and put the American people first, and they just continue to squabble. Like, this is hurting everybody, and pretty soon it's going to become unmanageable.
What do you mean about both political parties, Steve? Do you have both parties voting no?
I'm just saying, both political parties need to work together. That's it.
Yeah. Yep.
You can't have one without the other. It's not just on this issue. Everything has become so tribal these days where it's no longer the best ideas win. It's whoever has the most votes instead of the best ideas.
Building off what you said, Steve, I agree. I think that and Tanner as well. I do think that we'll do the roller coaster thing until probably some movement upward when we have some sort of resolution, which is being talked about right now, where they basically are paying for essential services, so that at least some things come back online. And of course, full resolution, we're back on. But it was an interesting rebound today, and it's good for option sellers. But man, not everybody can stomach the volatility.
Well, and one more thing, real quick: the last thing that you want is the government shut down through November, because that means you go into a Fed meeting without any data. And now you run the chance of Powell saying, well, we got to be data dependent and we don't have any data, so no rate cuts. Last thing you want right now.
Yeah, I do think we're going to get a rate cut in October. And I think that they'll even go off of some private data to make sure. I don't even think it has to be federally sourced at all. Like, they even talked about using Adobe data last month. So
that's crazy. Like, you're going to get the government reopen at some point in the near future, and then you're just going to get a flood of all of this data that just hasn't come in for the past however long, 2 months or whatever. But it sucks to see the market pull back. I understand why it's happening. At the same time, for all the people that were complaining that we're running too hot, you got your pullback. Stop complaining. We hit extreme fear multiple times. So Sky should be clear once this government shutdown thing ends. At least I hope.
You guys want to talk some stock?
Yeah, we could do that.
What are we starting with?
SoFi.
Oh yeah, that one. I think
Which
we all
one's
own it, right?
Did you guys end up parsing through any of the 10Q that it was released this week?
Did you see Forum Forest came out, Tanner, like 30 minutes before we went live?
I got the notification on my phone. I have not gone through them. Is there?
They basically hit the 25 tranche, so the shares were awarded.
Got you.
So it's official.
Anything stand out to you in the 10Q?
Yeah, some things. Credit cards have just been amazing. They've added so many new cards, and the FICO scores surprisingly were not great. They added like a massive amount of their lowest, like under 640 FICOs. But that's not mattering if defaults are improving constantly. So now we're at 5.4% on the defaults, and considering the fact that we were like above 16% before, I'll take 5.8% all day long.
Do you have some charts for us? I mean, give the people what they want, Tanner.
Yeah, we can use your charts if you want. Oh,
we could, except they haven't been updated for a couple quarters.
okay.
Dude, I swear the stock just hit above $20 and I just stopped working altogether on updating anything. I was like, okay, this is my victory lap.
Yeah. So if you see here in yellow, that's their under 640, which, as you can see, quarter over quarter took quite the step up. So does that risk us going through a similar problem that we saw before? I mean, all the way up to Q1 of 2024, we were running up this high end of the FICO, and then that started dropping down. It looks like it's by far the highest. It's not exactly true. The reason why it's not is that it's counting such a big range. So 640 and below is counting many of the tiers added together. If you were to add, 680 through 640 together, it would be very high. Like it's quite a large range. So it's not, this line alone shouldn't be this big, but yeah, still, regardless, big step up there. Over 800 actually went down quarter over quarter. That was also very interesting, considering the fact that we have, been walking that up for so many quarters. But who knows? I mean, we can maybe see an increase later on. But yeah, it'll also be interesting once the smart card comes out. Like, how much of this is the new essentials card or something like this, where it's actually including people that are first-time credit users? And is the smart card going to play into that and make that, even more apparent? What do you guys think just from this chart?
Well, I was going to ask you on not just on this, but also on like the FICO scores. Do you think that's just them trying to take advantage of volume before rate cuts, or is that them like intentionally like changing the strategy and like maybe seeing something different from the macro than a lot of other people are, or some mix shift? Or because I'm puzzled by it. I have no clue.
Yeah, I'm not sure. And also, if you look here, one of the biggest step up ones that we can see also is the 640 to 660. So like even the other bottom of the rung lines are also climbing very fast. Well, and the 800 plus is literally decreasing quarter over quarter.
One of the interesting things here that's I don't see or is missing is we don't know the amount that these have been approved for, because in the past, whenever it was outside that credit box or they were expanding that credit box for credit cards, like offering to lower FICOs, they would just be really restrictive in terms of the limits that they offer for those credit cards.
This is the amount of loans outstanding on those credit cards. So
right.
This is fully accepted, and the amount of debt that continues to sit on those cards. So what it could also show, but we're not really seeing it across any other credit card company, is that the lower rung is Like these guys could have already been approved, and now they're just taking out way more credit because maybe they're in hard times.
So we're seeing it rise across the board, regardless of the FICOs.
Oh yeah. Credit cards in general is increasing. Where is it? Credit card products, we ended up seeing a massive step up in purple here. So this is the amount of outstanding people that actually have the card. We went from 344,000 people up to 392,000. By the way, interesting statistic, Robinhood already has more credit cards than us. And people are complaining that they're not rolling it out fast enough. And like, whenever you start putting it into comparison, they're actually growing their credit card products extremely quickly. But, you know, they can't help the fact that 3 million people have signed up for it. So it looks terrible in comparison, but still, they are really ramping it up very quickly.
It's a good problem to have. But I do like to see that SoFi's credit cards are not destructive like they were in the past. This looks like a good start.
Look at this. This is the default rate. If I just make this text a little bit bigger, the default rate has just essentially continued to fall. If we're talking about the most important statistic, this is by far it. And the fact that we've brought this from 16.4% in Q1 of 2023, you know, year over year is 12.1%, and now it's 5.8% year over year.
Yeah, I wonder if this is maybe why they sought to expand the credit box some, because they're like, hey, we're doing fine on credit cards. That I know it's a different product, but that's yeah. Oh, it also could be that they're realizing that if they want to hit those 35s or 45s, they needed to accelerate, and they can do safely enough that they can expand. But
what it is too is like SoFi has also always taken a long time to get to know an industry in a way. So we were a student loan company to start, and I don't have a lot of data on how they were, you know, pre-2018. But my assumption would be that over time they got better with their underwriting. With personal loans, we do know because they weren't really around back then. And since 2018, or well, 2017, the default rates have only improved over time. And so the longer that they continue to write for a specific product, not across different credit products, but in each individual product, like personal loans, student loans, home loans, and credit cards, they've gotten better over time. So they've only just recently started to ramp home loans, and they've only just recently started to ramp credit cards. And I think it's because, you know, obviously they've made some mistakes trying to grow them earlier, or just, you know, learned the lesson that every company has to learn, like understanding how to underwrite.
So I'm just trying to put together the pieces here and open this to conversation with regards to credit cards. It's a small segment of SoFi's business. They're trying to ramp it up. And when trying to ramp it up, I think credit cards, correct me if I'm wrong, Tanner, but I think credit cards have the loosest FICO standards out there out of everything else.
By far.
And okay, we know that SoFi has a pretty tight credit box that they want to maintain, but that I would imagine conflicts quite a bit with them ramping it up and the speed at which they want it to go. So, okay, Robinhood is ramping credit cards up much faster, neither here nor there. My question is if, like, SoFi has two options. Either they keep the tight FICO credit requirements and they ramp up slower, or they open the FICO requirements up and they can ramp up faster and take on more risk. And I mean, with their default rates being where it is, I can see why that is appealing. My question is, of those high FICO scores and of those top earners, because we know that the income range for SoFi's ideal clientele is like 150K plus, does SoFi offer compelling enough products in the market to bring more people into their ecosystem for credit card offerings? Because if somebody is making 200K, let's say, they have their pick of the litter in terms of, you know, what types of rewards they can qualify for. And I don't necessarily feel confident that they would go to SoFi from a benefits perspective. So that could also be something that conflicts with their ability to scale quicker, which leads me to this next option that, like, okay, well, they might be forced to widen their credit box if they want to maintain that growth speed.
Yeah, I think it's hard to compete right now from a consumer standpoint directly with Robinhood's 3% cashback. If I were to pick a credit card that I would pick, and I'm looking at one that offers me 2% or 2.2%, and then another one that offers me 3%, just as a consumer, I would choose Robinhood's. But is that one, how people are going to market, like doing all the research to be like, hey, what is the best credit card? And two, which one is sustainable? Do we know if Robinhood's credit card is even sustainable yet? And I don't think we have that answer. And I think SoFi has talked about that a lot of like, and Anthony knows been very specifically talking about Robinhood, saying, hey, like we're trying to build a great product, but we're also trying to build it sustainably. So
far,
right,
so good. But yeah, we don't know really until we see a lot of consumer softness. And thankfully, where we see it, it's either isolated segments of the economy or isolated companies, not endemic at all, as you can see, with SoFi's earnings. And so until we get to that environment, we won't know for sure. But yeah, it looks like it might work. But it is, like SoFi said, Noto said, not guaranteed. It's always been one of those things when they launched it back in 2023 that I was like, okay, this is great as a consumer and user. I'm not sure how this can work at all. And a lot of other people said that as well, and actually be accretive. Now it can be accretive to the flywheel. So, but yeah, Vlad set out to prove everybody wrong, and we'll have to see. Like even he can't say how it fares in that time, like of a pullback or recession. So,
Steve, we also saw Robinhood earnings this week.
We did.
Are you buying in finally? Or
no, why are you going to say it like that?
Because I've been trying to get you in this name for a long time.
Everybody's been trying to get me in this name for a long time.
I even gave you shares.
Roy even gave me shares.
Yeah. And did you like the, I don't know, what was the measly 100% year-over-year growth, was it?
Yeah. Are we going to talk Hood now?
Yeah. It had a Rule of 40 score that slightly beat the Rule of 40, just, a hair.
All right, so you guys start. Let me build something up real quick.
Yeah, those were absolutely ridiculous earnings. The craziest thing is they published all their monthly metrics and preliminary numbers as well for the third month. And so you go in knowing most of the numbers, and then they always surprise. And like there was a lot of things that impressed there. Probably the two biggest were securities lending continued to go up. I made a little post on this today. An analyst, Devin Ryan, actually noted it as well. And they mentioned the earnings call, but as IPOs continue into the bull market, that fuels hard to borrow stock conditions. And as a result, securities lending really spikes up for Robinhood to a pretty meaningful source of revenue. And then predictions market, they mentioned this for preliminary numbers in October, that the volume they've had in October alone exceeds the prior 3 months combined. That's at $25 million revenue for one quarter. It's pretty crazy.
For which product, right?
Predictions market, events contract.
Yeah, predictions market's going to be huge, man.
Yeah. No, I thought that was probably their next 9-figure product. Yeah, it is, but it also securities lending was last year. I can't remember the other one. Bitstamp. But man, it's ramped so much faster than I expected, and it still feels like there's a long ways to go. Now, there's a lot of other players that are getting into it. DraftKings, said, "Hey, we're launching predictions." I think they even put a timetable on it that it's relatively soon. FanDuel's probably will as well, but yeah, it's crazy.
This is a little too much in the weeds, but I'm curious how they put Bitstamp as $100 million product, because it's not. They did 16 million this quarter.
Yeah, I wonder if they have, like, since it's institution, that they might have some contractual obligations that they know that are ramping, and so they're like, "Hey, we're going to get there, and it's guaranteed."
Yeah. No,
But,
that regardless,
I did wonder
prediction market is going to be so big.
Yeah, I bet IR would answer that too.
Sorry?
I bet IR would answer that.
Yeah, I could reach out. I wish, by the way, more companies did this.
Yeah.
This is insane. And I would love to see a slide like this for SoFi as well. Like if they were to show us personal loans, banking, credit cards, like all their products to show us how they're growing in market share. But if we ever see a downturn in the markets, this would be the number one slide that I would be continue to show people, is whether or not they're growing in market share, regardless of total volume. Okay. Because Robinhood's always going to be impacted by a negative or bearish market, but are they continuing to win more and more people over relative to what Schwab is doing or Fidelity?
Can you zoom in on the fine print? I wonder what they consider to be, like, how they calculate the market share.
I can read the fine print. I'm not on a laptop, so I can't zoom. But
do they highlight there how they calculate the market? Because, like, what do they include and what do they not include?
Robinhood equity notional volumes is divided by total U.S. equity notional volume from SIBO over a given period. Robinhood options contracts traded divided by the sum of equity and non-equity options contracts by OCC times 2 over a given period. Define crypto notional volume divided by total cryptocurrency exchange volume from the block over a given period.
Gotcha. So it's volume based. That's
yes.
Interesting. So basically, like, you could have a couple of big whales on one side or the other that just do the majority of the volume, and they can sway the definition of the market share.
Yeah, and that's the most appropriate way of looking at it.
Yeah, it's probably industry standard. I never like thought about it.
Yeah. But this is really freaking exciting. Equities market share over the last, couple of years has gone up 138%. And also, they are doing themselves a disservice on margin market share by going out to 2022. Just year over, like from 2024 to Q3 of 2025, we're going to see the biggest jump because they went really aggressive on margin recently. Like they really stepped it up to lower their rates to be competitive with some of the biggest names.
Yeah, that it's kind of interesting that was their slowest growth rate out of those four. Despite that, it's not slow, 55%, but
yeah. It's the time that they picked.
So let me ask you guys something. If you had to pick one right now, SoFi or Hood, what would it be?
For how long?
That's a good question that I wasn't prepared for. I'm not sure. 2 years?
2 years SoFi.
Yeah, someone said to me, which one do you think doubles first? And I think SoFi doubles first.
Yeah, there's too many tailwinds for SoFi and some uncertainties for Robinhood in the short term. If you said 10 years, Robinhood, just as quick, no hesitation.
Is there Robinhood like 3 or 4 times bigger than SoFi?
In terms of market cap?
Yeah.
But yeah, they
Steve have here.
I just ran the numbers, and it is crazy how much better the margins are on Robinhood than SoFi. So this is Q3, this black here, Q3 earnings. Net interest income, total revenue, operating income, net income. Hood is operating at basically a 50% margin compared to 15.5% for SoFi. And then pure profit, just over 43%, almost 44% for Hood. SoFi, almost 15%. Hood's business is it's incredible compared to the margins of SoFi. And then when we look at this stuff here, I did each quarter. I apologize. This is what happens when you rush things. You forget a quarter's tag. So
all good.
When I look at the year-over-year growth in Hood compared to SoFi, I mean, look, SoFi's growth is incredible, right? Almost 38% year-over-year in Q3. Hood grew 100%.
Yep.
On revenue. And everybody thought SoFi's operating income was incredible at 132%. Hood's operating income came in at 287% year-over-year on growth. I mean, these numbers are incredible by Hood. I mean, that's why I said to you, Tanner, earlier that Hood's starting to look more interesting to me. And if they get a real pullback, I will find myself as a shareholder, I think.
Define real pullback.
Well, I said around 75 earlier, so I have to stick with it.
75?
Wait, why
You
75?
laugh, but I mean, you're acting like that can't happen.
No,
why
I'm
75?
not saying 25.
Why 75? Like, why not 76 or 74?
Okay, 74.21. How about that?
No, but is it just like a gut, or do you have like a spreadsheet that's informing that decision?
No, I don't have a spreadsheet that's informing me. I'm just looking at the market cap. I'm looking where it is, how much assets under management and everything else compared to the big banks, what their revenue is, what their operating income is, and what their growth is compared to the bigger banks. And I think that if you get a pullback where capital rotates out, 75, I would get really interested.
It can definitely get to 75, but you'd have to think about what kind of market would we be in for that to happen. Everyththing would be on sale.
That's not true.
Well,
That's absolutely not true. The Mag 7 could just keep going up and Hood could go down.
Well, that's unlikely.
Correlated.
That's unlikely, but what's more likely is crypto winter. Crypto winter hits, it's not going to hit the entire equities market equally. There will be some hit, I think, across the board, but be disproportionately felt with names like Coinbase and Robinhood. So that's the one environment where you could see that.
There is also a possibility that it just like oscillates for the next 18 months between 120 and 165 or 170 or whatever, and just sort of like stays within that channel.
Yeah, I think if you're looking at the market share growth, I don't know. I don't really try to invest that way of like, if you can catch that, like there would have to be a full-on bull or bear market for this company to get cut in half. They're growing.
Yeah, but what's the chances that from where it goes now, what's the chances of Hood doubling before SoFi now? Okay, if I'm putting fresh capital to work, I still think from an ROI perspective, SoFi has more upside potential over the next year or two than Hood.
Yeah,
so
yeah.
Hood would need to retrace significantly for me to allocate capital to it because I could just buy SoFi at these levels.
Here's a real question. Go back to that chart, okay, that you brought up, and people can look at the growth of SoFi and Hood. And I'm not even trying to say that SoFi is a faster grower. One thing that is not up there that you didn't talk about is valuation. That's
you want
completely
me to build
different
out valuation chart? I'm happy to do it.
Yeah.
No, I'm not suggesting that you're
on
doing.
The fly. I mean, you want like you
Hold
want a
on.
DCF model? What do you want here?
I'm not suggesting that you're doing something not
I'm
correct.
listening to you guys. I'm watching the chat. I'm typing in the chat. I'm building this out. Tell me what you want. I'll build it out for you.
I am not. Okay, hold
Tanner,
on.
Tanner, why are you trying to talk him out of buying Robinhood? Don't do that.
Compare free cash flow, Steve, and then we'll talk, okay?
Yeah.
Free cash flow is not applicable to banks. You know this.
Dude, I'm just...
That was the joke. Have you...
Dude.
You've drank too much milk or something before coming on here.
Seriously, you're acting like freaking we don't follow banks.
Oh, God.
What is that?
Yeah.
Listen.
Do we have any guess with this? Free cash flow is not really a thing that you look at with banks. It's data-driven investing is a great article. Enough said.
Let me say what I was going to say. Whenever people look at this, the people who are not I'm not talking to the Steves, I'm talking to the new investors that are coming here for information. You're saying, okay, you're looking at these two businesses. One clearly looks better than the other. That is not like, if we were just buying the best businesses in the world, we'd be investing exclusively in Palantir and NVIDIA, right? Yeah. It's about valuation. That's what stops some investors from time to time. However, look at the comps that put those numbers up as well. My question to you guys is, next quarter, who puts up higher total revenue growth, SoFi or Hood?
Well, I mean, Hood's Q4 2024 was a very large quarter. So they have a big baseline. So
you're looking at it.
That's what he's saying, man. They can't grow 100% like for multiple years in a row because the comparable periods become impossible to beat.
Right.
Yeah, I would say Robinhood, but it's too close to predict, and I wouldn't want to predict either way.
What do we think SoFi's revenue is going to be in Q4?
I think they're both growing about 40%.
Roughly. I want to say 1.05?
I think they're both growing around 40%. I don't know what that would be. I don't have the spreadsheet in front of me, but
I'm updating it. If you disagree, tell me a different number.
Steve, I mean, you're not buying either of these though, right? Like we're talking about which one's.
He's talking to me like I'm fighting him. I'm I'm not even arguing with you. I'm just giving context to some viewers.
No, I get it. I'm just saying you can tell me a number and we can figure out which one is going to have more growth. And the numbers I picked are pretty close. Just like Roy said, 40%, 40%. I mean,
yeah, that's ballpark right around there. You know, there's a lot of year left, so you know it's too you know things could be a little bit more sour than we expect in the macro. But yeah, that either way, like it's really impressive. But Tanner's point is top line revenue. The market will give a much higher valuation if you're accelerating there, especially right now. But that's not the only figure. And there is a price to pay that's too much. We're not saying Robinhood is at that price, but SoFi is relative to Robinhood, I think, trading on a discount.
SoFi has, I would say, more catalysts, though, in 26
Oh, yeah.
than Hood.
That's my next video idea, actually.
It is a good video idea, actually. I mean, when you think about it, and I was saying this to, I think, Amit yesterday, or maybe it was, I don't even know who I was saying to at this point, but when I look at SoFi, I look at a company that is a fraction of the share price, and there's a lot of investors that don't do the level of due diligence that we do. And there's a lot of investors that just see numbers on a screen that don't necessarily look at market cap or growth rates or financials and think about it in a very rudimental way where they can get 5 shares of SoFi for the same price as 1 share of Hood. And every $10 it goes up, they make a lot more money on SoFi. And when you compare it, when you think about that, and then think about the fact they're not in the S&P, and they're likely to get in the S&P at some point in 2026, especially since the S&P loves financials, that's going to open up a lot of volume. We saw what happened with Palantir. We saw what happened with Hood. They're going to get a lot of volume off of that. It's going to give them a lot more credibility. And then you think about crypto, think about level 1 options. You have your first full quarter of it. And you think about a lower rate environment. If the Fed cuts rates quicker than expected, which would be a great thing for many segments of the economy, you're going to get an expanding NIM with SoFi, because think about the amount of loans that they issued at high rates. Issuing loans at high rates and then them lowering the interest that they're paying on their deposits expands the NIM, which will make profitability on banking boom. So you have a lot of catalysts in addition. Look at Roy taking notes right now for his video. Look at him. And then you have originations from student loans and from the housing market getting unlocked. So SoFi's got a ton of catalysts. Like, I'm really bullish for 2026, no matter what the market does for the rest of the year.
Yeah, I got. Thanks, Steve.
You're welcome. Roy.
I did. Seriously, there was one thing you said where I'm like, I need to note that so I don't forget that.
Which one was
the
it?
other was something else came to me, but
which one was it? Out of curiosity.
The student loan aspect. I actually had, I think, 6 or 7, and I had it kind of lumped under. But I'm like, I need to make sure I underline that because there's
use the NIM one. The NIM one is important that people don't discuss enough.
Mm-hmm.
Did you guys see Upstart's earnings?
We're going to Upstart now.
I wanted to highlight one chart in particular, which was their originations. And whenever I compare those to SoFi, I know that SoFi's originations obviously would be much bigger. They're a much larger company. But this is for loan platform business exclusive originations, meaning that they're originating for other banks, pension funds, insurance companies, etc. That's only what Upstart does. Their entire business is loan platform business. And SoFi has already passed their originations in 5 quarters. the multiple that Upstart gets as a business is much higher than SoFi's. Do you guys think that this should change the multiple that these two businesses get? Obviously, Upstart took quite the hit after this Q3 earnings, down, I think, like 15% after earnings, something like that. But
Well,
go ahead.
Well, I would say no, because if SoFi had not gotten a banking charter, then yes, absolutely. But because they did, they should be heavily penalized and trade only on a multiple based on tangible book value. Or at least that's what the Bears would say. I think yes. Obviously, this segment of the business for SoFi is a significant part of the thesis, especially for me, but also for many analysts as well. When you look at their notes, it is ramping incredibly fast at a higher rate than Upstart as far as volume. Now, it's not all of SoFi, and so there are parts that are not growing nearly as rapidly, like tech platform, but I think that SoFi is trading under value here, like relative to where Upstart is, and higher quality too.
Yeah. Tevis, what do you think about Upstart? Has that ever been a name you ever looked at?
I don't think about Upstart. I never have, and it just doesn't interest me, really. Like I think I already have a lot of fintech exposure as is. It's a huge chunk of my portfolio. So I've never really looked at other names in this sector. As a result, I only know them tangentially from stuff that I'm like, if I'm making a video about SoFi or a comparison or something like this, then I'll only read about Upstart in that context. I don't cover their earnings. I don't look at them in depth.
Yeah, that's fair.
But I think I have like significantly fewer positions than you do.
I think that's also true. I don't hold Upstart, but let's go quickly to traffic. Website traffic for SoFi, Robinhood, all the big fintechs ended up showing off what they got in October. Now, the interesting part here is that this was a massive quarter for not only SoFi, but also for Robinhood. And I cover a lot of names here: Coinbase, Chyme, Cash App, Venmo, PayPal, Nubank, Lending Club, Upstart, Ally, And what I constantly see is SoFi and Robinhood are seeing by far the biggest hiccups. Like, they are separating themselves from the rest of the other names. Whether you are Team SoFi or Team Robinhood, and the communities often fight online, these are the two winners. Like, these ones have clearly separated themselves from the rest of the crowd, and it's very exciting to see. Now, do you guys think website traffic is a forward indicator for member growth or a lagging indicator for member growth? Curious what you guys think.
Is that a trick question? How can it be?
It's not a trick question. Do you think that this website traffic is any indication of them growing or what they've already done in Q3?
I would lean towards the latter, but I'm not sure.
Travis?
Okay, so if it's a leading indicator, then it means that people are shopping around, let's say for a credit card, and they're going on SoFi's website and seeing their offers. If it's a lagging indicator, then they already have a SoFi account and they're just going to log in to look at their account. I don't necessarily know how much actual banking, or depending on the products, is done on the desktop, like the browser, versus the app. So, I mean, undoubtedly it's both, unless you can split out what page you're looking at.
It does look like a small amount ends up going to the website. I would put it at less than 10%. But from every month and quarter that I've followed this, we've been able to guess the amount of members to pretty close ranges. And you know what's actually funny? This quarter in Q3, the downloads for SoFi and Robinhood were much closer. The website traffic was much closer to the amount of new members than the downloads data was for their own app. The downloads data actually is what threw everyone and made it think that there was going to be 1 million new members.
Yeah.
Website traffic wasn't actually that bullish and would have probably put us closer to 900,000.
Do you think that's going to be the norm going forward, that the website traffic is a better indicator than Sensor Tower?
I don't know. I've used it for every quarter, but yeah, I'm not sure about Sensor Tower and the accuracy. I'm still going to follow it because, like, I don't know. Maybe we just change the conversion rate to see how many new members are actually going to be coming on.
Can we talk block for like 2 minutes? Because this is hilarious. I know block's normally boring, but this
Please.
is not.
No. This is not boring. This is crazy.
Yeah.
Steve, you own Block, but you don't own Robinhood?
I don't think he owns Block.
He owns Block.
I don't know if he owns
No,
it anymore.
I sold Block a long time ago.
Can I sell out of my little bit then? Because I'm tired of it. It doesn't really matter too much. But okay, so Block's earnings came out and top line revenue missed, but doesn't really matter. It's not the main measure of that company. Pretty good earnings. But this right here came out. They alluded to it. And basically, if you look at general and administrative costs, it increased by $68.1 million. And they had said, and this is right here from their earnings slide deck, that it was driven in part by an in-person company event. Excluding this expense, general and administrative expenses remain roughly flat year over year in the third quarter. And so if you actually look at, and we won't look at the numbers, but there they are if somebody's curious, that's the amount of increase. Now, some context that people added is that this is a once, like every prime root year, a number of years. So this is like the first in 7 years. And also that there was about 20 million in costs that were not related to this party, but still they threw a party that was nearly $50 million for their employees. Yeah, Jack has no appreciation, I don't think, for shareholder cash.
Why would that surprise you? Did you see the stock-based compensation this quarter?
The very generous to employees, and credit to Block and Jack Dorsey for that. That's not a bad thing, although it does change the investment thesis a lot. But no, this is the man that bought Tidal basically as a favor to a friend for an egregious amount of money. So this does not surprise me. This is why I don't want Block. This is why I will not own Block. Although if Jack Dorsey ever leaves, I will be very interested in Block.
Although their free cash flow this quarter exploded.
Yeah, no, like a lot of things are going right at Block, but there's a cultural issue still.
It's actually crazy. Like if you talk about a private business, it's probably a really good one. Like if this was like a family-run business and you're just putting on these amazing events for your employees and like, you're buying businesses to help out your friend, like sure, that's great. But to be a shareholder of that business and realize that there was a party that you were not invited to that cost $50 million. What are you talking about?
That should be brought up at the next shareholder meeting.
Yeah, I mean, it shouldn't surprise anybody. You're right, Steve. But I would guess if you put all 4 Robinhood events plus their live earnings calls all together, that it probably wouldn't equal that amount.
It is way too funny. And also, like, I want to know what that event even looked like. Because we don't know how much Robinhood's event was. I can't imagine it was... How much do you think some of these events are?
Dude, the contrast is that we've been sort of asking SoFi for the last 3 years to have a freaking investor day, and Jack is over here just throwing luxury parties.
No, but in a way, if you're a shareholder, like, you don't want them to spend a lot. And then I feel like a company like Robinhood, the way that they work their employees, like we talked about Blocks off. It's like a Zen yoga room. Like they're already not working, and then they're spending all these,
Yeah, but like if you're in the top like leadership at Block, like Block has 11,000 employees, which is kind of crazy. Over 11,000 employees. I seriously doubt that all of them got to go to this party. It's not like a concert or something that they all just flew to.
I mean, it might be, dude.
I mean, I would imagine it's like super luxury for the top brass, maybe a couple hundred people, like 300-400, not 11,000.
No. And also, I bet a high majority of that headcount is like customer service and helping with Square and stuff like this. But crazy.
Yeah. So it's an entertaining company to follow. I'll give them that.
Yeah. I thought I saw that and I'm like, man, like I can't. I want to know what that even looked like. I don't know. Okay. Next, am I already ready to move this conversation to BMNR? Are we at that stage already?
You might want to do like 2 minutes each on Chyme and Shift 4 and then BMNR.
Sure. Thank you.
So you can leave me out because I don't know shit about either of them.
Chyme, I'm a shareholder of both. Shift 4 for the long term for sure. Chyme, we'll see. Right now, it's a trade. And it's not a trade because I'm red on it. I'm actually quite green. Today was a super green day, actually. And in a case of this bloody red of a day, they were up 10% for some unknown reason. And honestly, it was probably one large buyer. But they are a company that's very similar to SoFi, but servicing a much lower end earning consumer. Similar to Cash App, but just eating Cash App's lunch. And that's actually been documented that the large majority of Cash App users that are getting off the platform are going directly to Chyme. And yeah, they ended up showing off, I think it was 19% year-over-year growth or 21% year-over-year growth in active members, which means that they made a revenue transacting or they made a revenue producing action within the last month. They grew average revenue per user year over year. They tightened their expenses, so that fell. It was overall a really good quarter. Well, it was an A- quarter. It was fine. It didn't blow any expectations away, but we were happy. We're happy with it.
So the one thing with Chyme, I don't know too much about it. One thing we do all know is they used to be a Galileo customer. They still technically are for debit cards, which phase out by the end of the year. Tanner noted in the earnings call that they mentioned that there'd be a one-time hit. I believe it was 36 million.
33, yeah.
33. Okay. Yeah, that's higher than I remember them spelling out during their roadshow. As far as our IPO documents, we knew of at least 18 million. So it'll be a nice bump for one quarter for SoFi, although at the loss of their largest Galileo client, which is already deprecating anyway. But for Chyme, that might be an opportunity. Like if anybody is eyeing that stock, sometimes algos just don't pick up the context for whatever reason. And so you go in and it expects something that is not there. And in this case, a one-time large hit relative to their revenue or their actual net income might give you a buying opportunity. So no guarantees, but that's what I'm kind of thinking with Chyme. So
this was really exciting. We're going to see a massive bump. So essentially they pulled forward them spending on this termination agreement into Q4. Did you see this, Tevis?
No.
Seriously though, check this out. This is pretty cool.
Okay, this is Chyme's earnings. They called out
they called out SoFi because they were their largest customer.
Yeah.
And they said that they're going to incur a one-time expense of $33 million in Q4 2025. That was expected in Q1 of 2026, the exact time that Anthony Noto said that they were going to see a ramp.
On Galileo?
Yeah, for Galileo.
Yeah.
So that's like 30% of SoFi's current, tech platform growth or revenue.
Yeah, one-time influx, but when every other aspect of your business is going well, let me revise and say SoFi will probably beat in terms of revenue acceleration for this quarter. Maybe not over the next year.
That's not great though. I don't know. Let me present the other side of it. If Chyme is saying as part of, what did it say? As part of a termination fee?
Yeah.
Yes.
Essentially. Okay, so it's a one-time payment. Now we have SoFi's management that comes out and says, expect the numbers to look better in Q1 2026. What does that tell you? Well, if you didn't know this, it tells you that, Galileo is going to actually organically grow and ramp up, and we're going to do more revenue. It's going to be a recurring revenue because the business is getting better. But now that I know it's a one-time fee, I'm like, okay, yes, they're going to be better in their financials, but that doesn't necessarily give me like a good feeling for the long-term growth. Does that make sense?
Yeah, but they have other that are actually starting on onboarding and will be giving the revenue there quarter one. It's not just from this. I think that they're talking about the organic growth, not this.
Yeah, I think that they were potentially looking to just surprise with this. They said 10 potential deals are coming through the pipeline in Q1 that are expected to close in Q1 of 2026. That's probably Southwest, that's United, that's probably other large banks. I know there's some Latin American companies that they've been talking to.
Yeah, no, I know that. I'm just saying this is going to be a big chunk of the Galileo revenue. So when you're looking, because like Galileo is not going to double, it's not going to be 100 million and now it's 200 million for Q1 2026. It's probably going to be like, 130, 140, like with this one-time fee. So anyways, it's still good. I like it. It's just that this is going to like take away from, I think, the main thing, which is the new clients, because it's such a big fee.
Yeah, it depends on whether or not they spoke about it, right? And if they also say what the growth was about in the earnings call. Like if we see them come in at 140 million next quarter, which is probably what they're going to see, are they going to say, hey, 33 million of that, like don't expect that to recur? Who knows? But we already knew. So to counteract this a bit, we already knew Chyme was gone. Like everyone knew this. I just didn't know that they were going to get paid on the way out. That's, I think, the little bonus.
Yeah, that was known, but the timing wasn't, and the amount is higher. Yeah. But I still think like this is one of those things where some analysts will just miss it because it's a footnote in a company that maybe they don't cover, and so this will probably be a pretty nice beat for. I mean, it's always a beat, but it'll maybe be nicer than normal, partly because of the weight of this.
And I'm going to keep pounding the table. I don't know what you guys think about this name. Shift 4 might be one of the cheapest names. Like it's insane how cheap this company is, and their goal is to grow at 30% compounded annual growth rates over the next 3 years. It's unbelievable. They just announced a $1 billion share buyback program. The company's worth like...
Hold the prices. Tanner just got excited about a buyback program, everybody.
I'm always excited about buyback programs.
No, you're not. Not like this.
I love it.
I felt like you just almost came out of the screen or something. Like you just got so excited.
Shift 5. Yeah, it's super cool. Obviously, Jared Isaacman is no longer there, and he will be working for NASA. But honestly, if you talk about the greater good, I think that that's pretty awesome for the American people as well.
Yeah, and to answer Amit's question, why are they buying back stock with a $6 billion market cap? Because they can.
What does that mean?
Me or Amit?
It means that they're a small company, so presumably they should have better opportunities for ROI of their invested capital than buying back shares.
And that may be the case, but like a lot of their growth comes from mergers and acquisitions, which you can only digest those as a $6 billion market cap company so rapidly. If you try to do it too quickly, especially without Jared Isaacman really being engaged there, you might run into some problems. So I guess that they're probably just trying to pace through that. But they make plenty of cash. This is not really a
I don't even like. How's that any different from a $40 billion company buying back the same respective amount of shares? Like PayPal is buying. No one complains about that.
Dude, it is different because the larger a company gets, the more they exhaust their organic growth opportunities without looking into new verticals, and they become an established player. And it's like Apple, right? Like the main way that they can essentially get, like they buy back their shares to make their EPS look better, to continue that trajectory. that's not the same if the company was under $10 billion. They would have so much runway ahead of them for organic growth.
It's not about making their EPS look better. They're giving shareholder yield to the people that hold the business.
Exactly, because they can't find other more direct ways to give shareholder yield in the form of organic growth.
They're expecting to grow 30+%. They're buying back 30% growth.
Shift4 or Apple? Who are you talking about? Shift4.
Shift4. Shift4 is buying back. If they still expect to grow,
dude, 30% is absolutely a very respectable and impressive number. But like, if you're a $6 billion company, like Hims, for example, is like growing 70, 80%. Nebius is growing like 600%. My point is like, there's obviously different verticals. It's not apples to apples, but like the smaller the company is, the larger the runway for growth, the easier it comes, because you don't like, there's so much out there. 30% for a $6 billion company is like, it's impressive. It's not like all-star level impressive. Like freaking Robinhood is growing 100% and they're a $100 billion company. And you're going to say Robinhood?
No, but that's no. This is a terrible comparison. They're $1 billion company because they're growing at 100%. That's only the market cap. That's only what investors are willing to give them. We're not talking apples to apples on revenue. Like, if you're talking about who is growing at the pace of revenue, how much revenue did Robinhood put up this quarter? 1.2 billion. Apple or Shift4 did 1.17. So they're putting up 30% growth, doing almost identical revenue.
Yeah, so you would say they're undervalued, not necessarily that they're growing.
Yeah, so what do you do when you're undervalued?
Sure, you buy back shares, but like, if they could better allocate that money into an opportunity that yielded them a higher ROI, you don't think they would have done that? Management has a freaking fiduciary duty to do that, or at least
I think that they're trying all things. They're acquiring businesses. They'll buy back stock as well. I think they're trying a lot of things. I think the thing that they're trying to highlight is that the stock has gotten cut in half, and so they're trying to take advantage of this moment. And their price to free cash flow right now, and I mean trailing free cash flow, is 10 times. Okay. Their price to free cash flow going forward is 7.5 times. Like, that's cheaper than PayPal. Would you not buy back your stock?
This also is similar to when they talked about taking the company private, when their valuation was like in the 40s a couple of years ago. So
why is it so cheap if they're doing?
Because payments. Right now, the market hates anything payments. Doesn't matter what it is. That's one of the reasons why I block. It's not, if you actually look at the earnings report beyond revenue and you say, okay, Jack's just being Jack as far as the party thing. Really good quarter. Should have been rewarded. Was not. Anything payments right now, the market's like, oh, gross, get away from me.
So the entire payment sector is trading at a similar valuation as Shift4?
No.
Most.
Yeah. A lot of them, there are some names, obviously Visa, MasterCard, Adyen, that are trading at supreme premiums.
Why? Because they're just brand favorites, or
they have superior moats, good technology, mainly moat based. Shift4, go ahead.
Oh,
I was going to say, this is one of the reasons why they want to be careful too with their share price, is because a big part of the model of Shift4 is acquisition. They have bought just outright through cash before. They've also acquired using their shares. What's that?
Can I just add something? What needs to be seen on this cash to debt thing is the interest that they're paying on this debt. They have gotten some very superior or like preferred rates, and that's why they've just chosen to just not pay it off. Like, as you see, all those years where they just didn't pay off that debt at all, it's because it was at 0%. So they were just like, we'll just keep it.
Yeah, and that's a good point. But like, for this, basically what I'm saying is they don't probably want to acquire a significant amount of debt and be like a Fiserv, because a big part of the model is acquisition. And so they're going to be using their shares, which if they're trading at a severe discount, all of a sudden their mergers and acquisitions are just a lot less effective. And so they're wanting to do what they can defensively. If that's buybacks, then so be it, to keep that share price up, which I know it's a little bit weird, but this, like, it really is a part of what Shift4 does well. And if they, for some reason, slow that down, that'll hurt their revenue growth.
So let me ask you guys this. Now that I saw that debt, it's actually, I'm curious what you guys think. Do you think they'd be better suited from a market perception perspective to use that cash to buy back their own shares or to buy back their debt? And the reason why I ask is because, okay, on one side, the debt is basically no interest, and it makes logical sense to keep it on the balance sheet. But on the other side, it just looks bad from a market perspective. It doesn't look like the business is as strong if they have a large portion of debt, number one. Number two, it doesn't give them as much flexibilities if they want to pursue future acquisitions. So the options are, well, you either buy back stock and lower the float because you think you're undervalued, or you can reduce that debt and then have a better profile to the market, which could also make your stock go up because it's a better risk reward.
Yeah, I mean, I think a large amount of what's also not giving them a premium right now is not based on their debt, but based on some of the acquisitions that they've done, which have led them into new areas that Shift4 has never seen before. So Global Blue, like, usually they do some acquisitions, maybe they stay under the $200 million pace. Like honestly, Robinhood has done this a lot. So I'll show you an equivalent to what if Robinhood were to make this similar mistake. Robinhood acquired Trade PMR, X1, Bitstamp. What are some other ones, Roy?
I'm sorry, I was typing in the acquisitions. Did you say WonderFi?
WonderFi, great. All roughly under $200 million. And then imagine tomorrow they put in a bid for Kalshi at like $10 billion. People would be like, whoa, I mean, you can afford it, but that's different, That's kind of what they did. They were buying up these tiny merchant businesses that were extremely undervalued, and then they bought a fully public business, Global Blue, for like over $2 billion. And not only do they deal in merchant services, but they also have a consumer app. Shift4 has never had a consumer app. So it just was, way out of the blue, and that's what tanked the stock. And then all this Fiserv news, everything like this, it's just continued to pile on. But honestly, the business looks fine, and I'm a really happy shareholder. It's just, it might take some time to play out.
They made a $2 billion acquisition, and they're under $6 billion right now.
Yeah, they're under $6 billion now. Whenever they made the acquisition, they were closer to like $12 billion.
Can we move to BMNR, please?
Yeah, I was going to say, for transition, there are two types of stocks that the companies actually care about their share price immensely. One is companies like Shift4, which are reliant on it for their merger and acquisition strategy. The other are digital asset treasuries, such as, there we are, BMNR.
Nice.
Shift4 is a big fan of crypto. They love it. BMNR.
Is this a now conversation or after hours conversation?
No, do it now.
Yeah, now.
All right, let's do now.
We just ended up seeing just today, actually, JP Morgan, Vanguard all doing or posting that they have stake in it now. Do you think that this is just retail, or that they're actually making their own positions here?
Don't forget, Tanner, JP Morgan and Vanguard, those are the small fish. The really big players, Kathy Wood has been buying BMNR all week.
I mean,
it's Tesla today.
She did?
Yep.
She bought a ton of BMNR recently.
Yeah, she has.
Yeah.
But I think the disclosures just came out today, but these guys have been buying over the last quarter. So their price average is likely much higher than, much higher. It's higher than what it's trading at today. It's not like they just aped in today. Yes,
Roy?
no.
I was just thinking about JP Morgan's comments, or Jamie Dimon's, JP Morgan Chase, on the crypto market as a whole. And it's weird to think of that organization as bullish on crypto, because I remember the previous cycle and they were anything but. And so many people have shifted on that. So yeah, this is BMNR and also Ethereum it's not just a retail story. It's an institution story as well. Tom Lee has talked about institutional inflows, that those are important, that's one of the reasons why Strategy has had the success it has, because those tend to be less fickle, far less so than retail. So yeah, go ahead and play this. This is great.
Yeah, this is just 17 seconds long. Some of Jamie Dimon's thoughts on crypto.
Skeptical of crypto at one point. You're still skeptical.
I've gotten away with no damage so far. Crypto is real. It can mean blockchain, stable coins. You have a JP Morgan deposit coin. You can move stuff. Smart contracts are real. All that stuff is real. It will be used by all of us to facilitate, better transactions and customer service.
If anybody was skeptical of crypto,
I mean, quick little highlight there. He's not talking block or Bitcoin. He's talking smart contracts, JP Morgan stablecoin on Ethereum. Pretty interesting pivot there. What do you guys think?
Yeah, this is the other clip of Jamie Dimon with crypto that I'll just
I've always been
this is before
opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years. Know your customers, sanctions, OFAC. They can get bypass all of that. If I was the government, I'd close it down.
Okay.
He needed to do that until he had the team to compete.
yeah, while they were buying in the background.
For real, though. For real. Steve?
Look, my investment thesis has not changed on BMNR. It has not changed on Ethereum. And I really do think we're in a position where stablecoin adoption and utilization is going to skyrocket in 2026. And if that happens, it could make Ethereum a deflationary asset. And if that occurs, it should bump the price of BMNR up.
Well, even without that, it should. A lot of, if you look at the exchange volume and everything, there are some weeks that are weaker than others, but there's a lot of more demand versus new supply being created. And usually that creates a pricing squeeze.
Yeah. No, I remain very bullish. I just bought more today, actually. And it's just going to have to, take time. It's not, I don't think that they're at risk of the business going wrong. They don't even have any competitors. Well, you could say Solana is a competitor, but for the Ethereum blockchain, all they have to do is buy more. It's a treasury. So there's no risk of them not being competitive unless it's competitiveness in which institutions like to purchase the stock, in which maybe SBET becomes a favorite because they've started to stake. So maybe there are some institutions that would prefer that take. But obviously BMNR thinks that there's something advantageous to not staking right now, or else they just would. Or at least partially stake. Do you guys have any reason as to why they're not starting to stake, or is it all shoulders?
I don't know for sure. I know that there's several different options there, and I think that they're trying to figure out what's going to be the best and how much they're going to use as a validator. But they need to either stake or say what's the delay relatively soon.
Yeah, I'd love for them to roll out a roadmap for what their plans are with regards to staking. You're seeing a lot of, I think it was 28% or so is just being staked right now. And I think that's the next thing, man. Everybody is very clear on the 5% target allocation goal. And they've been super clear about that. Tom Lee has had several keynotes. They talk about it every single week when they're accumulating their goal to achieve 5%. What they haven't talked about as much is what their plans are after that goal is reached, because right now we're over 50% of the way there. And at this pace, by January, we will have 5% allocation in BMNR. Then what? What can
Well-
shareholders be looking forward to? Because Tom Lee's main thesis right now for BMNR is that the Ethereum per share is just getting better and better. So shareholders every single week are getting a better deal because BMNR holds more underlying Ethereum. What happens after?
Yeah, I think this is the thing. The Made in America validator network is on their roadmap. Staking, obviously, and then Bitmine moonshots. So potentially just continuing to make other bets a little bit. But I think mainly the next part is the staking and then the validator network. That would just be constant net income, essentially.
Mm-hmm.
So, and he made a comment recently that they didn't just say they could earn a 3% stake. They said 3 to 4% stake. And he's also made comments recently about going above and beyond, potentially as high as 10% ownership of Ethereum. Do you guys look forward to that? Or do you think that that only just is getting people's excitement up? Or is that even exciting at all?
It's the context of that question was basically how on concentration of the Ethereum network, because part of the thesis for the Ethereum chain's existence is it's actually decentralized. It's unique. Bitcoin is certainly not ideal for transactions, although the Lightning Network as a layer 2 works okay on it. But ultimately, Ethereum, it's decentralized, it's resilient. And so there's a bearish argument out there that's basically like, okay, if all these digital asset treasuries really start hoarding huge amounts of Ethereum, all of a sudden we have a much more centralized network. And so then that can cause perhaps it to be actually less secure. So Tom Lee's response to that was basically saying, talking to a bunch of people that are involved in creating the Ethereum chain, that they think that 10% would be okay. So it's our hypothetical maximum supply that they could hold without perhaps causing some negative impact on the chain overall. So I will be north of 5% just because in case there's just a short bit of time where the chain is a little bit inflationary. It is slightly inflationary right now. They want to make sure that they always maintain slightly above the 5% at minimum, not like 5 exactly, no Ethereum over. But I would be a little bit surprised unless Ethereum continues to be ridiculously undervalued, that they get it all the way up there, maybe like 6% or 7%.
Yeah.
I'd love for them to actually do something afterwards I know it goes against their entire sort of business purpose to be just a holder or a treasury company, but there's so much more activity on the Ethereum blockchain than on Bitcoin. So I understand the entire, I understand how it could deviate away from the MicroStrategy playbook of being a digital asset treasury purely. And I think Tom Lee, to some degree, with other investments, is thinking similarly, but I would love for them after the 5% allocation, or whether it's 6 or 7%, whatever, for them to not only stake, but to get more involved in that ecosystem of the application layer that's being built on top of Ethereum, to potentially foster some of these companies, do like a YC type of thing. I think that could also be cool because they could take like a VC route essentially for a lot of these applications that are being built, and you can essentially evolve into a full portfolio company in addition to just being a holder of Ethereum.
Yeah. One of the things that Roy said about the decentralization is Tom Lee also noted that, it's not his Ethereum. It's all the shareholders. So he thinks that they're sort of keeping the decentralization by having, so many shareholders of BMNR. But do you think that the vote is still being put in their hands, or maybe that's the concern?
I wouldn't be too concerned there. I think they're going to vote and be aligned with shareholders. So I wouldn't see much of an issue there.
Stephen Fiorillo, do you want to give the closing remarks? Your thoughts about
really
the market?
I'm not happy that we didn't get an earnings call out of them.
Yeah, what actually is happening with that?
I don't know. I wanted an earnings call because I wanted to see what they said about staking. And it's not just staking, it's staking It's restaking through DeFi because that's where you get the biggest bang for the buck. It's a little bit more risky to my knowledge, but there is a lot of things that they can do, not to mention when are they going to start generating revenue from being a network validator? I mean, there's other things that can be done with the Ethereum. They're not just going to sit on it. They have to put it to work. And I think the only way that we're going to learn about that is catching a Tom Lee podcast that he's on, whoever's podcast, he just ends up saying it. I mean, obviously he'll go crazy on X. We're going to have to actually see it. You would think that they would want to openly say that to their investors and anybody who's thinking about investing on a conference call. So I'm a little annoyed that they didn't have that.
Tom Lee, you're invited on the Fintech Friday if you want to tell us about it here.
I mean, I'm still waiting for him to go on Rogan, man. That's going to be a big, or either him.
Is he going on Rogan? He's not going on
Has Saylor even gone on Rogan? I don't think so.
I don't. When's the last time you guys have seen like active asset managers on?
Never. I've been watching Rogan for
Kathy
14 years.
Kathy Wood literally just did Diary of a CEO like 3 weeks ago.
That's Diary of a CEO. That's not Joe Rogan.
Still, like a podcast of that. I know Diary of a CEO is like much smaller than Rogan, but it's still multiple millions, like double-digit millions.
Yeah, he had Peter Thiel on, but I don't think they were really talking about.
Peter Thiel's different.
He did Andreessen.
Yep, Mark Andreessen.
Mark Andreessen, yeah.
A couple times now.
Yeah.
Which honestly, some of my favorite podcasts.
Yeah.
I love hearing from Mark Andreessen. What?
Did you listen to Chamath on Rogan?
Yep.
How funny was it when he talked about the liquor company he built? Just to buy cases of wine at discount.
I don't remember it too much.
It was right after he talked about the Europe trip. So he basically started an LLC and got a liquor license just so they could buy cases of liquor at cost from different wineries that you couldn't get in the stores of California. It was hilarious.
Yeah.
But like, I think he's rich enough to afford the wine, dude. I don't know why. Like,
no. He's
it was the whole thing. That thing was you couldn't get unless you had a liquor license.
Yeah. And he did it for his friends too. But those are billionaire solutions to.
That was a billionaire solution of what he did.
Minute problems. Okay. Ladies and gentlemen, thank you all so much for watching. Make sure you guys check out all 4 of our channels. We're all streaming right now. So check us out. Crossroads, Fun of Invest, or I think you're just under Tevis now. Future Investing and Steven Fiorillo. Really do appreciate you guys watching. Thank you all so much. But until next time, bye for now.
Cookies and milk.